And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom. It is my privilege to be joining you. And okay, we're going to kick it off strong this year. This is not going to be a goals show. I've done those in the past. So I jotted down aspirations for the new year, and I'll share those in the latter half of the show. But first, an email. Hi, Mike. How are the higher interest rates changing the program to buy single-family properties? Well, my short answer is they're not changing anything. They haven't affected what we do at all. Let me explain. My first single-family property I bought within the Lifestyles model, okay? That was in 2013, and I got that property at a 5.5% interest rate. It wasn't the best interest rate in the world back then. There was much better, but heck, still cash flowed over $500 a month on that property. It was a fantastic property. That's one of our three primary rules, must cash flow. It is the most important aspect of a rental property, not interest rate. Interest rate is a quotient in a formula, right? Let's go back to 8th grade algebra, and it's just, you're just plugging that in a box. It's only one factor. The overwhelming factor is when you do your analysis, does it cash flow? Yes or no, right? Follow the flow chart. If yes, proceed. If no, start over. Keep looking. You need to find another house. This one doesn't work. I'll tell you, interest rates today, they're not high. They're normal. Look at the historical chart of interest rates. We had free money the last few years, and we took advantage of it. But we're going to take advantage of the market no matter where we sit. Now, some may say, well, Mike, we're in a buyer's market right now. No. We're in a normal market. If we get to a buyer's market, that'll be juicy. I'll let you know. I'm watching for it myself. There are buying opportunities, absolutely. But as a whole, we're not in a buyer's market. We're in a normal market. We were in a seller's market the last several years, going back about 18 months to the last 3 or 4 years was excellent time to be selling rental property. If you had purchased before, they definitely rode up, especially when you improve the performance the way we do. So when you look for a single family property to purchase, again, I'm going to understand that you're using the lifestyle model that we teach, right? The distressed property, you're going to go in, you're going to rehab it, you're going to put a good resident in it, and it's going to be an example of best product, best price. Your number one consideration, again, is this property cash flow positive. That is the most important thing. And then number two, you want to look at equity capture, right? What is equity capture as a percentage of my investment? Notice I didn't say how much money are you making on the equity capture. If I find a home and I'm only $5,000 out of pocket and I have an equity capture of $5,000, that may only be $5,000, but it's 100% based on my initial investment, right? And then number three, once you get past those two, if those satisfy your strategy, now we're going to look at location. Where's this house? What's the economy of the area like? What's the neighborhood? Most important. What is the neighborhood of this property? And if all those factors are positive, right, you've got cash flow, you've got a great return on your out-of-pocket as a percentage, you've got good location, good economy, good neighborhood. Wow. We have now checked all the boxes. When those factors are positive, then that property is most likely going to be an excellent rental property, an excellent investment. So notice, nowhere in there did I say, well, you want a lower interest rate or interest rate this or interest rate that. Interest rate, it's just a factor in the equation, right? A plus B plus C plus D equals X. It's no more significant than your out-of-pocket cost, your rehab cost, what the property is going to rent for. Again, it's just a factor. So when you go, how is it changing the program? They're not changing anything, okay? And these aren't high interest rates. These are normal rates. If you look at historical interest rate average, we're in a normal interest rate period. So that led me to do some reading and some investigating, and I found some notes from a recent talk that a gentleman by the name of Howard Marks. You may recognize that name. If you don't, he's the co-founder and co-chairman of an outfit called Oak Tree Capital, huge investment company. I'm sure Howard's a billionaire. He's probably a multi-billionaire. Very smart man, been in the banking investing game for a long time now. I'm a real estate investor. I'm not a stock investor, but it's always good to read how very smart people identify and look at markets. And Howard, in his talk, and you can look this up, it was just a couple of weeks ago, he says the change is fundamental and long-lasting rather than cyclical. So he talks about sea changes throughout his career, going all the way back to 1978. And he says it's going to be here for a while. And then he reiterates what I just told you, that today's interest rates are not high. They're normal, and that these rates are going to stick around. This is going to be the rule going forward. In his opinion, and this is a brilliant guy. He's made billions of dollars. He says over the next 5 to 10 years, okay, 5 to 10 years. So if you're sitting on the sideline, listener, and waiting for us to get back to a sub 3% rate, it's just not happening. You need to plug that 7.5 or wherever we are, 8 into the equation. And if it works, then that's a property that will fit as a rental property. If it doesn't cash flow, if it doesn't work, go back earlier to what I said you need to look at, then you have to move on. You've got to find another house. It's the way it is, and it's the model moving forward. But again, it's a normal model. And essentially what Howard Marks also, he said, well, here's why we had these low interest rates. And his belief, it's essentially globalization and advances in productivity and technology. Think about just the last 30 years. Think about just what the iPhone has done for productivity. So we've been able to do more in less time at less cost. And all that is changing, right? We've got onshoring, so all this manufacturing is coming back to the United States for a lot of different reasons. It will be more expensive to manufacture something here, but it's going to be safer. Talks about supply chains breaking down, low birth rates around the world, instability and war. Wow, that sounds like 30 minutes of the nightly news, to tell you the truth. But it's the way of the world. And Howard Marks goes on. He says the low interest rates helped asset owners and borrowers at the expense of bargain hunters and lenders. But that has changed. So it's time for us to get back. We've gotten through the easy period. Now we're going to need to be hunters, right? Let's be hunters. Let's understand the equation and move forward. All right. So enough of the business. Let's have some fun. I jotted down for the new year, aspirations for the new year. If I had a 2 or 3 hour show, we could do a ton of aspirations. I'm not going to do goals, but these are things to work on, right? Things to focus on, things that I'm going to work on and focus on. And the reason is it's for the lifestyle, right? I'm looking to improve my lifestyle always. I do that. I create the wealth through the real estate, but that allows me the ability to work on my lifestyle. And if you're catching this early in the year, great. If you're catching it late in the year via podcast, great. That's fine. There's no better time than today. So let's kick it off with, I want you to think big, okay? I want you to move away from the middle class mindset. I want you to have that millionaire mindset. I want you to see yourself becoming a millionaire. I want you to see yourself owning more cash flowing rental real estate, right? Set a goal to buy more. Or if you haven't started yet, tell yourself, I'm going to own a rental property by March 1st or whatever the date is, but keep it short term. Keep it right in front of you. I want you to focus on investing instead of saving. Both of those are different. You need to understand the difference between the two. I will tell you, wealthy people save to invest then they deploy those funds, and they don't sit for very long, okay? I'm saving for my next investment. That's what I'm doing. So if you want the next single-family property or the next passive apartment property to invest in, how much do you need? And typically I'll tell you about $25,000 to get either one of those to get in. If you've got more, great. But let's say you're sitting on $15,000, then you need to focus on obtaining that next 10 in 90 days, in 120 days. How are you going to do it? Are you going to sell something? Are you going to pull money out of a retirement account? Are you going to, whatever you need to do, but focus on investing instead of saving, okay? And understand those are different. And look, I get it. Times are tougher now. We're in an election year. It's going to be nuts. I don't know what's going to happen, but it's going to happen, okay? The two tribes, this is an all-out bloodbath by the two tribes. So whatever craziness happens, understand it's coming, okay? Don't be surprised. But in the meantime, you've got to move forward. You've got to continue buying streams of business so that you can pass streams of cash flow, buy businesses, right? So you can bypass all of this noise and just kind of smile from the sidelines. I want you to set a deadline for action, right? Set a deadline, write it down. Tell yourself you will get this done at a certain point of time and complete it. My name is Mike Harrison. We'll be right back.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
You can't be financially free if you're psychologically imprisoned by disabling belief systems.
Are you ready to break free from your disabling belief systems about money, real estate, retirement, and financial freedom? Then join us for Lifestyles Unlimited's live online free workshop. Learn the belief system that thousands of people like you have used to break free from corporate America and create the lives they have always wanted. Register at lifestylesunlimitedfreeworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm Mike Harrison. If you have any questions or comments for me, please send me an email. I'm happy to help. My email address is askmike@luinc.com. I'm sharing the aspirations for the new year. We're not doing a goal show. So I last left at set deadlines for action, right? And those deadlines work for other goals too, not just rental property. Yes, this is a real estate investment show, but you can do that with weight. You can do that with relationships. You want more cardio, right? Other financial obligations. Set that deadline. And when you start setting deadlines, you're going to make it a habit, and your success ratio is going to improve. Okay, reading. Read more for personal growth, not just entertainment. Yes, we live in a social media world, and it's easy to get lost in that, and you're just shuffling through. But we've got to stop and engage ourselves and say, hey, I'm going to read some nonfiction today. I'm going to start another nonfiction book, and whether that's self-help, real estate investing, whatever subject it is. Don't just read for entertainment. Okay, I think we all do this, and this is avoid negative self-talk. Avoid negative self-talk. We are the hardest on ourselves, okay? I do this often. I need to be more weary of this. I tell myself, I've got a bunch of investments, and you always look at the two or three, you're like, man, I could have done better there, or why'd I do that? I blame myself, but instead of saying, I shouldn't have gotten in this deal. And I'm not saying they're bad deals. They're deals that aren't as good or weren't as good as others at the same time, right? I picked wrong, I guess. But what I need to tell myself is, look, overall, well, that return may not be as good as some of the others. Instead, I tell myself, you know what? I'm happy I'm invested in real estate. I'm happy I don't have that money tied up in crypto or gold. I'm happy I didn't go out and buy the latest, greatest franchise and put it in some strip center and struggle to do that. I'm happy I'm not in corporate America. So stop being so hard on yourself. Avoid the negative talk. Look for the positives in your life. Tell yourself you will do better next time, right? All right, aspirations for 2024. Get out of toxic relationships. Get out of them. Now, when I say toxic relationship, most of you thinking are a spouse. Not always the case. Girlfriend, boyfriend, obviously. But it could be coworkers, right? You could be in an environment where you're having lunch every day with 3 people that hate themselves and they hate society. And they're always complaining about this, and they hate the job and they hate the company. Man, all that just gets ingrained in your psyche and it will eat at you. Get away. Get out of there. Maybe you have the neighbor that you see the neighbor and maybe you're out working on the yard. You wave to the neighbor. They come over and it's 10 minutes of the world is going to you know what. Stop it. Just wave and move on. The overly political guy, right, or gal. Stay away. Just stop it. The haters of the world, there seems to be a lot of this. Move on. Get away from the people that are, before you even know who they are, they're the ones that tell you, I'm this or I'm that. Address me as such and such. You're like, wait a second. I don't even know who you are. Why are you telling me how I have to address you? Ridiculous. So these are angry people. Get them out of your life. Employees. Yeah, you could be the business owner and you can have the toxic employees. Take that employee out and get rid of them. Get them out of there because they're not only toxic to you, they're toxic to the business, they're toxic to the environment, and they're toxic to their coworkers, and they're toxic to your customers and your clients. Okay? 2024, lose the toxic relationships. You have a business to run, whether you're an investor, a lead, an independent rental owner. Negativity is going to eat your brain. It's going to hurt your mindset, and you're going to make some poor decisions out of this negative mindset, out of hate or fear. And so you got to purge that, right? We're going to move forward. We're going to get that out of our life. All right, moving along. I want you to get another income stream. Okay, if you only have one income stream and it's the W-2. You need a passive income stream. If you have a passive income stream, get a second, get a third, get a fourth, get a fifth, okay? Back to that single income stream. The riskiest thing you can do financially in your life is have one income stream. One. And by the way, just throwing this out there, you may not know this, but rental property makes a heck of a second stream of income. Just saying, all right? Hint, hint, wink, wink. Hope you're picking up what I'm putting down. I don't know any millionaires that only have one stream of income. I don't. So let me ask you this. What came first, the $1 million or the second, the third, and the fourth stream of income? I will tell you what comes first is the second, the third, the fourth, the 20th stream of income is what came first. The $1 million came second. So start with small choices, compound them. One rent house isn't going to retire you, but it's a start. One passive investment of $25,000 won't retire you. It's a start. Just make good choices for yourself, rinse and repeat. Take responsibility without excuses. This is huge, and this is something that a lot of folks have a failure to embrace or understand. Back to my book review, right? One of the aspirations is read more. If you need another book for your book list, there's one called Extreme Ownership. It's by a Navy SEAL. You may have heard of him. His name is Jocko, Jacko Willink. Fantastic book. I have it on Audible, so I can listen to it when I travel. Your mindset is you'll feel better when you take ownership. When you're constantly, whatever happens, and you're always looking for who dropped the ball, who did this, who did that, and you're involved in this process, you need to understand that decision was yours, okay? No matter what. Every decision in your life is made by you. It's not made for you by society or your environment or the politics or the relationships or the year you were born in. Every decision you make is on you. And when you own it, you're going to feel better. You're going to stand taller. You're going to sleep better, okay? I'm telling you, back to the earlier aspiration, if you don't create that second, third, fourth, fifth, or sixth stream of income, that's on you. You have to own it. If you've been listening to us here at Lifestyles Unlimited for 3 years and you haven't purchased another stream of income, that's on you. Own it. Understand the power of gratitude, okay? Appreciate what you have while striving for more. Recognize gratitude. Maintain that positive outlook. And the positive outlook is going to drive your inspiration. It's going to drive your motivation, okay? No matter where you are in your life, there is somebody that will instantly, in a nanosecond, trade places with you. They will trade places no matter where you are. Every one of you listening, someone out there will trade up. They will take your position gladly. Gladly. I went to buy ice the other day. I have to buy ice because my ice maker is broken in my awesome refrigerator, which for whatever reason, they don't make the parts for the ice maker anymore, which is ridiculous. But anyway, that's another complaint for another day. I'm grateful I have a refrigerator, but I had to go buy ice at 7-Eleven, bought 4 bags. As I'm walking out, a really tall, big guy, looks like a big tight end, ripped. He walks in, and I kind of have to step aside. I'm trying to juggle 4 bags of ice, and I look down, and he has no legs. This guy's like 6'7", tower of power. He's got the metal legs that he's walking in. I didn't even know it. I looked at him, first. I saw here's a tall, handsome, huge, strong guy, young guy. No legs, okay? So be grateful for where you are in life. And I'm sure this guy's fine, right? He's accepted it. He's moved on. That's his reality. He was getting around just fine. I wouldn't have messed with the guy. I mean, he was huge. He looked like he could have played tight end for any NFL team out there. Big guy. But do I wish I owned more real estate? Yes. Do I wish I started earlier? Yes. Are there some deals that I own that could be better? Yes. But I'm grateful I'm here now. I'm grateful for the 11 years that have changed my life as a real estate investor. I'm light years ahead of where I ever thought I would be. Can I do better? Sure. But I'm grateful for where I am. Take calculated risk. Take calculated risk. Calculated. Don't take ridiculous risk. Discipline, focus, education. When people find out I'm a real estate investor, they fall out of their shoes to come tell me some ridiculous horror story. Their friends, brothers, cousins, second uncle rented to a biker gang and they destroyed the house. Okay. Every time I hear that goofy story, I can point to what went wrong, why the experience was bad. Being educated reduces risk. You know what else is risky? Having one stream of income. Risky, giving 40% of all your income to taxes. Risky, not buying assets to overcome inflation. That's risky, okay? As real estate investors, we avoid all of that. We take calculated risk. And most important of all, aspiration for 2024, I want you to live the lifestyle. I want you to celebrate the wins, celebrate your accomplishments, treat yourself, treat your family, give more. You're not going to be here forever. Your kids are going to move away from you at some point. Spend some time with them. Your neighbors, your good friends, spend some time with them as well. Family members are going to pass. Friends are going to pass on. Say a toast on special occasions. Help others. Have fun. And most importantly, remember, it's not the money. It's the lifestyle. Make it a great day. I'll see you next week.
The The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.